Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for coming on.
Thank you for having me.
So a lot of volatility in stocks this week on the mixed messages coming out about the U.S. China trade talks. Trump saying he's willing to wait, and then just today, Stephen Mnuchin and Trump saying the talks are on track. So what's the story today in the global markets and your outlook on the near term?
Sure. The President Donald Trump is asking basically China to buy about 50 billion to 40 to 50 billion won worth of farm goods a year, which is significantly higher than 8.6 billion the country bought last year. So because of that, there's continuation negotiation that's happening. So both sides wants to get the better terms for themselves, and that is really making the reason for the delay in the actual deal striking. If you look at the two countries, they are probably most likely to finalize something before the December 15th, because U.S. is saying that if the deals are not struck, then about 15% tariff on 165 billion won worth of Chinese import should be taxed. So if that's the case, then that really will cause a huge problem for both countries. So we think that these two countries are negotiating quite aggressively to that date, and hopefully will come out with something that can can create win-win situation for both countries. Trump also said that something could happen regarding to those tariffs, but added that they're not discussing that yet. And also he believes that trade talks are going well. So overall, I think that this is causing most of the market to be volatile. So until the December 15th, until the actual first stage of the deal is done, until the actual announcement of the tariffs, we think the market will be probably fairly volatile for now. U.S. market was pretty much flat yesterday, and European market was down by very slight amount. As for the Asian market, it seems to be showing some recovery today.
Well, here in Korea, the Kospi has seen foreigners selling off for 21 sessions in a row, more than 5 trillion won worth of shares. It seems they are net buyers, though, in Taiwan and Japan, to name two of them. Today, it looks like the selling continued on the Kospi.
Right. It is quite unfortunate that the 21 days of net selling is actually happening, and that resulting into one of the biggest underperforming market of the world as for this year. The Kospi really is not doing too well, while the Taiwanese equity market and Japanese Nikkei are doing all well with the net buying of foreign investors coming in. As you know, the Korea's net selling by the foreign investors were amounting to 5 trillion won, which is a very significant amount of money. The reason for this is because we think that it is a geopolitical risk. And you know that there's a lot of news about U.S. troops might be moving out of Korea due to the cost that the U.S. is asking for Korea, and Korea is talking about these things are too additional cost, which is, really seems to be some noises coming out where between Korea and U.S. are not really getting along that well. And that is definitely a negative news for Korea, for the foreign investors who will be probably cautious in terms of actually purchasing any additional equities of Korea, while they're actually heavily buying of Taiwan as well as Japan, because their relationship are very strong with the U.S., and it seems to be that's causing the whole this uncertainty for Korean equity market. Also, foreign investors looking at Korean equity market with one of the very poor corporate governance market with very low dividend payout ratios, and these are all big concerns for foreign investors. With the high level of taxes, not investment into fourth industrial revolution related industries, and too much regulations are all the risks regarding Korea at this point in time. We think, though, with the U.S. market rising and Chinese market rising, Korean equity market will rise as well after massive selling that has occurred. But, however, though, the upside will be probably limited relative to China or U.S.
Got it. Well, let's look at oil prices for a second. OPEC and its allies, including Russia, have been meeting in Vienna, and they're reportedly considering an additional production cut. What's the near-term outlook for oil prices?
Right. In order for the oil price to rise, we need to see dollar weakening a bit and also the liquidity increasing quite significantly. And we are seeing those factors. You are seeing the liquidity being very ample in financial market and globally. M2 growth rate for U.S. is picking up to 7.5% from bottom of 3.2%. M1 growth rate of Europe is rising over 7% territories, all fitting into the liquidity of the financial market. Now, if the liquidity continues to rise, then oil price are most likely to rise, with the dollar being quite stable, and with the Trump saying a lot of things about dollar, the dollar seems to be fairly stabilizing to the little bit of the weaker side, well below $98. If that's the case, we think that there will be continuation of interest towards the oil. And also, as you said, the OPEC and Russia have decided to cut in terms of the production. And that number is actually another 500,000 barrels per day, which will be added to total of 1.7 million barrels per day production cut. If that continues, then clearly the supply and demand side will indicate that the prices for oil should rise further. However, though, with the high oil prices, then the production by the shale gas companies will rise as well. So we think that in a longer-term basis, oil prices are range-bound. Low end will be $55. High end should be about $65. Right now, it's at about $58. We think that most likely it will go up to $65 over the next 6 months, but that should be the probably ceiling for the price.
Got it. All right, Mr. Yu, that's where we'll have to leave it on this Friday. Thanks so much for making time today.
Thank you very much.